It's a huge deal when you're seeing $8 billion worth of gold delivered. And in the March contract, there was north of 4 billion delivered. And every single month, we're seeing massive amounts delivered. This is an anomaly to the nth degree. So something big is happening with gold here in the United States and with silver, as May was the largest delivery of silver ever. It was also the second or third largest delivery of silver from a bank to a non-bank participants, from banks to non-bank participants, hedge funds, family offices, et cetera. There's big money, and it's not just the bullion banks this time. Who these participants are, I'm not quite sure, but something big is happening with gold and silver on the COMEX.
Gold's ascent has prompted analysts at leading financial institutions to revise their price forecasts upward. Analysts at JP Morgan recently projected that gold could reach $6,000 per ounce if there is even a slight shift away from U.S. assets. July 1st, 2024, the deadline approaching for COMEX market compliance, triggering preparatory market adjustments. These regulatory shifts have driven unprecedented physical gold inflows to Western exchanges as banks scramble to secure actual metal backing for their positions. COMEX-eligible inventory has now reached approximately 90% of open interest, a dramatic shift from the previous norm of under 20%, signaling preparation for potential physical settlements. Market expert AndySchectman notes that significant development is unfolding with gold and silver in the U.S., and it's not just institutional bullion banks involved this time. He emphasizes record-breaking gold and silver deliveries on COMEX. In May, over 2,500 gold contracts, worth nearly $8.3 billion, were delivered in a non-active month. Silver also saw historic volumes during an active delivery period. Citing analyst Michael Lynch, Schectman explains that this suggests short sellers may not have the physical metal to deliver. At the same time, he emphasizes this as a clear sign of stress in the paper gold market. Rising COMEX delivery requests show growing demand for physical gold, putting pressure on the paper market. If this trend continues, the COMEX may be compelled to adjust its operations in line with the physical market, which could create significant pressure on gold stocks and further exacerbate the divergence between the two markets. Such a break could mark a historic turning point when paper gold would no longer be sufficient to satisfy real demand, and only physical possession of the metal would have any real value. Regarding the recent developments, Schectman calls this the biggest event of his 35-year career, saying it confirms his long-held warnings. He urges the public to pay attention as major capital prepares for a shift that mainstream media continues to ignore. Before we dive into AndySchectman's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
We continue to see this month over month over month. The amount of gold coming into the country is off the chain. It really is. And this was the largest delivery in a non-active delivery month ever in the history of the COMEX market. And we saw also, the same thing happen with silver, which is an active month. It was the largest silver delivery. But for gold, it was 25,401 contracts delivered so far. So if we take 25,401 times 100, that's times 3,250 bucks. All right, so that's 8,255,325,000. So almost $8.3 billion worth of gold was delivered. And one of the things that I read that was very interesting today was that there's 1 day left which is for the last notice of the May contract, and there's 526 contracts that are still open. What the author was basically saying, and let me give him credit too, just a second. Let me just look at my email. I want to give him proper credit. I read it in just this afternoon. Crud. I don't have it. I like to give credit where credit is due. I guess that's neither here. Oh, Michael Lynch. Michael Lynch is very good. And he said that there's 526 contracts that are undelivered. It's one of the highest ever with the last day notice. Normally there's just a handful, if that, of contracts that have not settled. What he is saying is that this is an indication that a short does not have metal to deliver, as usually there's only a few contracts remaining at this point. I'm not predicting a default, as the short will almost certainly come up with some metal. However, this is an indication of short selling metal that they do not have. So, yeah, it's a huge deal when you're seeing $8 billion worth of gold delivered. And in the March contract, there was north of 4 billion delivered. And every single month, we're seeing massive amounts delivered. This is an anomaly to the nth degree. So something big is happening with gold here in the United States and with silver, as May was the largest delivery of silver ever. It was also the second or third largest delivery of silver from a bank to a non-bank participants, from banks to non-bank participants, hedge funds, family offices, et cetera. There's big money, and it's not just the bullion banks this time. Who these participants are, I'm not quite sure, but something big is happening with gold and silver on the COMEX. It's easy for me to say that, right? The public should see this. Well, why should they see it? Well, the biggest deliveries in the history of the COMEX market are happening month over month over month over month over month. We started in November, and here we are, and it hasn't stopped. And it's one thing to see this metal come into the COMEX. It's another thing to see it delivered. And whether or not it leaves the COMEX or just moves to eligible, not registered, it's massive. The biggest money in the world is telling you that something's afoot with gold and silver, and so the public should be aware of it. But as Robert Kiyosaki always says to me, Andy, people can't get out of the way of what they don't see coming. And you got 120,000 people follow you, but that's nothing compared to the people that are watching Fox News or CNN or CNBC or whatever these channels are that don't talk about these hugely pivotal things. They're missing out, and that's, God bless someone like yourself who's been doing this for a long time and sticking your family name and your neck out there and talking about this stuff. This is huge. It's one of the biggest developments of my 35-year career. 100%. It legitimizes everything that we've ever talked about on a scale that I didn't think we'd see. So it's an amazing. And I just want to thank Daniel and Rob and all the people in this effort to bring this to a head where it's now actually real. So kudos.
While reflecting on taxation, AndySchectman argues that gold and silver should not be subject to federal capital gains taxes. He cites the legal tender status of precious metals, noting the inconsistency of taxing them. If Trump eliminates such taxes, Schectman says it would be a huge win for physical metal holders. The long-term capital gains tax on physical gold and silver is equal to an investor's marginal tax rate, up to a maximum of 28%, due to their status as collectibles. Short-term capital gains on precious metals held for less than 1 year are taxed at ordinary income rates. For example, a person in the highest tax bracket purchased 100 ounces of physical gold at $1,800 per ounce, and 2 years later sold their holdings for $2,000 per ounce. While they are in the 37% tax bracket, they would pay 28% tax on the capital gains made from these sales, as they earn $20,000 in capital gains. That would translate to $5,600 in income tax. Schectman stresses that gold and silver aren't tools of panic, but shields against a system quietly eroding wealth. He warns that public ignorance stems from media silence on monetary history and central bank accumulation. To him, this is about foresight, not fear. Let's get back to the interview.
When you listen to DeSantis talk about the bill, he said, gold and silver continue to move higher. So, when you add that in, like, for example, on the Glint app, at the end of the year, you get a statement from one of the big accounting companies that details what was a taxable gain and what wasn't, or a loss rather. But that's one of the issues with all of this gold and silver that is transactional, whether it be digital or not. You have federal capital gains taxes. So certainly it would be nice if he's right and President Trump does remove that. It's a huge boon for physical metals and physical metal holders. And we shouldn't be taxed. I mean, if I can go from Canada to the United States with 240 gold maple leafs on me and get through customs without reporting because that $12,000 face value at the time was valued at $9,700 because of exchange rates. They'd let me come into the country with 240 gold maple leafs, which are $50 face value, with no reporting. So the legal tender aspect is real. We shouldn't be taxed on it any more than if you had junk silver, dimes, and quarters and went and spent them at the Publix grocery store here in Florida and would be responsible for paying capital gains taxes, although it would be difficult to track that one. The point of it is it just shouldn't be the case with legal tender. So I think that's certainly a worthy cause to get behind, and I'm thank you for having him on tonight with us. My whole life, that describes the last 35 years of my life, because the message that we speak of is one. It's like the first time. I don't even know how to say it. It's just the message is not one of Ferraris and trips around the world and making huge profits. It's the opposite of that. It's about insurance. It's about understanding the realities of the situation. Most people aren't able to even go as far as understanding the realities fiscally and monetarily and socially and bigger. They're not able to go there. And so we're accused of being doomers and gloomers and fear mongers, but it's not. I mean, just simply looking at what gold has done since we closed the gold window in 1971, it's literally the dollar's almost lost 100%. It was 35 bucks an ounce. Well, what is it now? Just under 33. 3,300. It touched 3,500. So it's lost 98% of its value in my lifetime. It's not about being doom and gloom. It's about realizing that the system is working against people who save in dollars, period. And gold and silver are a way for people to not only save in an asset that has shown its appreciation over the years, but that's been money for 5,000 years. And here we are, the biggest money in the world continues to accumulate it. And yet the public is just not aware because it's not given the time or the proper understanding or explanation to the public. They don't get it. And the people who you would want to try and help and talk to, they've grown up under the assumption and the understanding that it's our birthright to live better than our parents and our grandparents, and the Fed comes in and fixes everything. And you start your career talking to people that were in the World War II era, who grew up in the Great Depression, and it's a whole different understanding. God bless that whole generation. There's not many of them left. But I will tell you, that's who I started talking to. And I remember one of the first people I talked to, his name was like John Smith. I said, "Hi, John." He says, "What's this John stuff?" It's Mr. Smith. I mean, these people, it was just different. Everything about them was different. And they understood respect. They understood history. They understood what it was like to have hard times. And everything's changed. I kind of going off here, but I'll just simply say that people just don't want to hear that the potential black swans that are floating out there, and would rather think green shoots and hope springs eternal. I would just simply say that, to me, the biggest problem that the people who talk about gold and silver have is that it's lumped in with being doom and gloom instead of it being wealth, that the smartest money in the world is accumulating. The biggest money in the world is accumulating. The central banks are repatriating. It's not always about doom and gloom. It's about being smart and understanding monetary history, understanding wealth, understanding what happens to all fiat currencies ultimately return to their intrinsic value of zero. And this is no exception with the US dollar.
The ECB links increased physical gold deliveries on COMEX to rising economic policy uncertainty (EPU). As uncertainty spikes, more investors are demanding delivery, not just trading on the price of gold. If the world's largest capital is preparing for a fundamental monetary reset, shouldn't you be asking why gold and silver are suddenly at the center of it all? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.